in the investment world, many studies have come out recently, and I think the idea of passive investment lately has been that to take the decision making a little bit out of the trader or investor's hands. And one way of doing this is using artificial intelligence. And welcome, Vittorio Manente, to the program to talk a little bit about artificial intelligence.
Yeah, hi Dave. Thanks for having me at the show.
So you're coming to us from Paris. Are things still locked down over there? I haven't been keeping up with Europe very much.
Yeah, originally I'm Italian and now I live in France. And today it's the first day of lockdown, so we're gonna be stuck at home for the next month or month and a half. So, but
Well, it's a good time to catch up on our investment theory and work on some
yeah,
ideas, I suppose.
yeah, absolutely.
So let me ask you, I know I've heard of the term artificial intelligence, but what does it actually mean as far as for investing?
So basically, first let's start with the with intelligence. So basically, intelligence is the ability of learning something and then using this learning to take some decisions, right? And when we talk about artificial intelligence, we use the term artificial because we are using the computer to learn from the past and then use this knowledge to do something to take some decision for the future. And when and I think that this is quite important when we are dealing with finance, because when we are dealing with finance, we have a, I don't know, 10, 20, 30 years of information that can be used to take decisions, future decisions. And basically, computers have the ability, much better than humans, to learn what has happened in the last 40 years and then using this knowledge to invest in something.
So I was looking on your website and I came across NEXTAlpha, which seems to be your core strategy. What is NEXTAlpha?
So, NextAlpha is a strategy that invests in either gold or bond or equities, and it uses machine learning to decide in which asset class we need to be invested. And typically, we are invested in one asset at a time. We have developed this strategy back in 2017. We have incepted in November 2017, and the strategy has been running basically for the last 3 years. It's quite uncorrelated with the performances of the market. We have a 18% correlation, and in the last 3 years, we basically had pretty consistent returns. We have an annualized performance of like a 20% per year.
I think that's really interesting because I was looking at my 401k for work, and I'm thinking that I'm investing in all these different things, but I found out that every fund in my 401k has Apple stock in it. So it seems like these days there's so much money, but it's all chasing the exact same companies, a few companies. So finding something that's not completely correlated with the stock market is what I think a lot of people are looking for right now. So you say that it Next Alpha is going to help you make the decision to switch your investment between either equities, bonds, or gold. What are the specific products that you use as far as ETFs, or which bond or which gold or which equities products does this strategy use?
So at the moment, we are rotating, like you say, we have three TFs, and we rotate among these three TFs. So we invest in QLD, which is 2 times leveraged the Nasdaq 100. Then we have GLD, gold, and long-term treasury bonds, which is TLT. And yeah, that's what we rotate.
So how are you able to predict the future with artificial intelligence? Like, how does it work? I mean, it seems like how can anybody know the future? I mean, does this What's the process? How does the computer do that?
Well, well, nobody knows the future exactly. So the way that we do it with NEXTAlpha is basically we learn what has happened in the past, and then we basically said, okay, that's what has happened in the past. That's what might happen in the future. But it doesn't guarantee that what has happened in the past is going to happen in the future. And so sometimes artificial intelligence can get things wrong. And our level of accuracy is roughly 85%. So 85% we are right, and 15% of the times we're wrong. For instance, I can give you a couple of examples. I mean, it's nice to talk about when things go good, go well, but it's also important to talk about when things go wrong. So let me talk about a little bit this 15% of the time. Because, for instance, artificial intelligence saw it wrong uh, in March and in October. Because in those 2 months, basically the software said, okay, go get invested in equities. So in March, the market went down 20%. Right now in October, the market is just at zero, like minus 2-3%, something like this. And it doesn't mean that we need to lose money just because AI told us to be invested in a given asset. Because we need to be prepared, and actually we're prepared for the events when AI is wrong. And the way we do that is by complementing AI with some statistical approaches. So basically, when we are invested in a given asset, and the investment has been driven by artificial intelligence, then based on statistics, we are able to set up some exit plans, just in the eventuality that the market moves against us. And I can give you the example of October. So like I said before, the market went down 2-3%, and at the moment the NEXTAlpha is at plus 7%, despite being invested in the Nasdaq 100. And the way we did that is because when the price action is moving against us, we are able to just to have some threshold levels that tell us, okay, if the price moves more than this amount, then just go cash. And just by leveraging this, we were able to turn just a bad decision into a profit.
So how does it work? Do people send you their money, or do how does NEXTAlpha how does it work? Do we set up an account with you, or what's the actual process?
Well, the way it works, basically historically, since we launched NEXTAlpha, we have set up some separate managed accounts. So most of our clients they just implement NEXTAlpha through separate managed accounts. And then a couple of years ago, what we decided to do, it was to make NEXTAlpha accessible to everybody, independently on how much money they have to invest. So what we launched was a subscription services. And basically the subscribers, they are receiving some notifications in what they need to be invested, or what should be the exit price and so on, so that they can basically invest as much money as they feel comfortable with and still just make the same type of profits that we're doing with NEXTAlpha, without basically setting up any separate manager account.
I think that's a real trend in our industry in the last few years. I remember when I first got into finance, there were so many restrictions to entry, and a lot of people didn't want to talk to you unless you had, a huge amount of money to send their way. And I think it's really become a trend these days to allow whoever to get involved, regardless of how much money you have to put up. And so I was reading on the website. So you already have a successful base of managed accounts that are administered in Europe, but in the United States, it's offered as a subscription service. So somebody would subscribe to your service, and then you would you would be in communication with them and let them know when to adjust their accounts. And actually, we are going to be offering some free subscriptions today. So stay tuned, and at the end of this presentation, I'll explain to you how you can get a chance to get a subscription for free to this service. How did this idea come to you? Have you been in finance your whole career, or how did you get involved in finance?
Absolutely not. So my background, I'm a mechanical engineer by background, and I've been working within the automotive. I've been within the automotive industry for the last 16 years. What I know how to do quite well is programming, because programming it's a hobby for me. And back in 2016, an acquaintance of mine asked me to develop some life cycle indexes based on the components of the S&P 500. So while I was doing this analysis, what I noticed was that when the market turns bearish, then all the equities, they lose money, some more, some less, but at the end of the day, they are losing money. So when I saw that, then I thought, all right, there might be some asset classes that when the equity market goes down, they should go up. I mean, there should be some uncorrelated assets. So at that time, I got the idea of NEXTAlpha, which was basically investing in uncorrelating assets, and basically decide when it was time to go in equities or being in bonds, and then eventually gold. So that's how I got into finance and NEXTAlpha. So I started with this idea, then I started to work on it, and then the first version of NEXTAlpha was ready around, I don't know, June 2017. And at that time, we were investing in the S&P 500, gold, and inflation-protected securities. And again, at that time, we had a rudimentary way to select the type of asset we wanted to invest in. We were using some kind of return on investment based approach. And since then, we learned quite a lot. And the strategy has evolved in the way we take decisions, but the core idea of selecting uncorrelated assets, has always been there.
Well, I definitely find it very important and impressive that you publish your results on your website. I know my friend Brent is always saying, these people come with these ideas and strategies, but they don't actually show the proof is in making money. You can be the nicest guy in the world, or you can have a very slick website, but in the end, we're here for the returns, and it appears that you've had really excellent returns up till now, and you're willing to share them. How do you get that data? Is that like if somebody followed exactly your recommendations, that's what kind of returns they would receive? Is that how it works?
Yes, exactly. I mean, the strategy is not it's not very active. So we basically trade at the end of the day, and at the end of the trading day, and we're basically just doing that like 3 to 5 times per month. So if you follow the instructions that I provide you by emails, and you roughly invest at the time I recommend, then the subscriber should be able to to have the same type of returns. Then it quite a lot depends on the fees that your service provider says. But because our trading frequency is relatively low, then what the subscribers get, it's the same things as they see on the website.
I was very impressed when I talked to you before. You were telling me stories not only of how you learned about compound interest from your mother. It was a very cool thing you were telling me about, but also how your significant other affects your has affected the evolution of this strategy before. And I certainly know as a trader that my significant other is not always too fond of when I have drawdowns, and I can feel her in the back of my mind. How would you say that your wife has affected the strategy over time?
Well,
Is that a
first,
personal question? I don't know.
no, I know it's not a personal question because I think uh, if we want to do things better, if we want to improve in life, it's quite important to listen to to the people around us. I mean, I think constructive feedbacks are always important. It's quite important not to put our pride in between the feedback and ourselves, because if we are able to just listen what other people have to say and and things are constructive, that's how we evolve. And like you were saying, and NEXTAlpha has been evolved over time. And I think just let me back up a little, because first I think that if you want to be a good money manager, you need to have a lot of your money investing in strategy you manage. Because as soon as things that don't go as planned, then because you have a stake a lot of your money, then you are the first person that wants to do things better. And that's exactly the same with NEXTAlpha. I have a lot of my money invested in NEXTAlpha, so I am the first person that want to make things work. Then the next point goes into, I mean, how much volatility you can tolerate, what is your risk appetite. And going back to my wife, so I have a certain threshold of risk. I mean, I can tolerate a certain degree of volatility and drawdowns. But for instance, my wife, which was one of the first person that started to invest with me, she has not. So for her, even 3 to 5% drawdown, it's something that she can tolerate. She doesn't like. And just basically listening to what she has to say, how she would like to see things done, then this help us quite a lot in improving the strategy over time. So if in the past we had for instance, some drawdowns that were in the range of like 10 to 15%, right now, thanks to her, we basically we managed to minimize all these circumstances. And actually, I would like to say thanks to her that we managed to make 7% in October despite what the market is doing, because thanks to what she said, we managed to just achieve what we did this month.
Well, I've come into that myself in that I have a very high tolerance for risk, and it doesn't always jive with the people around me, and so you have to sort of make the adjustment. I certainly, from in my trading career, I was working for a market maker firm for a long time that was encouraging us to take more risk, take more risk, take more risk, take more risk, and coming out of that Chicago pit trading environment into managing other people's money, you back it off a little bit, and you want to be, it's not taking shots. It's people's hard-earned money, and it's something to be taken very seriously. And I think, yeah, she probably helps out more than you even realize. To have,
Yeah.
I know for me, having a family now has made me much more conservative, because it's not just me, it's other people that depend on me, and I think that speaks volumes that you have your own money and invested in this strategy. I think that's an important thing for people to know about. I was just wanted to ask you, so why do you use a leveraged NASDAQ product to represent your equities? Is having a leveraged product, is that more risky than having a non-leveraged product?
Uh, well, risk, of course, when we go with something leveraged, you can make more money, but at the same time, you can lose more money. So the way I approach the situation is that a leverage product allows you to make more money, but at the same time, you need to have some kind of mechanism in place that allows you to go cash in the eventuality that, for instance, a leverage product is just turning into a negative territory. And this is basically what happened in the last week. So, for instance, just to give you an example to contextualize what you were saying. So, at the beginning of the week, we were invested in in QLD, which is like the leverage version of the Nasdaq 100, and then we use the VIX term structure to understand whether or not we need to be invested or we need to go cash. And usually, when we see that the front 2 months are much below the spot value of the VIX, then for us this is an indication to go to cash. And this is what happened on Tuesday. So we were invested in a QLD, and then as soon as we saw that the front 2 months were much below the VIX spot value, then we went into cash. So yes, a leverage product gives you an advantage, gives like a advantage when everything goes well. But in my opinion, you need to have some mechanism, some risk mitigation plans in place to save your money if things don't go as planned.
Well, certainly, I know when people are watching this, in the future, we might be in a different situation than we are at the moment. But right now, we're right before the U.S. elections, and the term structure is in a pretty extreme situation right now. We're inverted. We're in backwardation. The last I looked, the spot was over 3 points higher than any of the futures, and it looks pretty darn scary out there. Is this the sort of time that you would be out of equities when it looks scary like that? I guess probably right.
Yeah, that's correct. Because as soon, for instance, in the case of NEXTAlpha, as soon as we see that the front 2 months are 10% below the value, the VIX spot value, then for us this is a exit signal. So, and now we are cash. So we are in cash since Wednesday. Yes, we've been in cash since Wednesday.
Does your artificial intelligence tell us who's going to win for president?
No.
Nope. Of course, I'm just teasing you. Excuse me. I was watching this YouTuber called CoffeeZilla, and he talks about these finance gurus, these people who come online, and you know about these people. They're all over our industry. They come in, they promise you 200% return for a week, or they'll show, I've got 10 new students working for me, and they're each making 20% per day, and you too can get that kind of return. This is not what we're talking about here. And in a sea of financial misinformation and fake gurus, people need to have a realistic expectation of finance. And I know from studying the greats like Warren Buffett, he's been able to beat the market, which a rough reference might be 10% a year. The market goes up over time. The best traders in the world may be able to, for a couple years, beat that. Maybe make 40% per year for 5 years, or 20% a year for 5 years. So, people need to have realistic expectations. It's not like you're going to come in and have artificial intelligence and you're going to turn $10 into $1 million. And I think people need to have realistic expectations. Would you agree with that? Do you have people come to you and expect, say, as I have it all the time, people come to me and say, Dave, can I give you $1,000 and you'll give me back $2,000 next year? What do you consider as a realistic return for this product? Like, what would be an example of good returns for you?
I mean, personally, this is just my personal opinion. It's so we've been running NEXTAlpha for the last 3 years, which is not a lot of time, but it's just a decent amount of time, and we were able to generate 20% per year. What I personally think it's a good return and something that is achievable. It's anything in the range of 10 to 15% per year. So if I'm able to generate with artificial intelligence 10 to 15% at like a minimum per year consistently for the next 10 to 20 years, that I would be very, very, very happy about that.
Yeah, I think.
Because what we need, yeah.
No, go ahead.
What we need to keep in mind is like when we watch these gurus on YouTube that they promise, like, I don't know, double your money in a month. If that would be the case, they wouldn't be on YouTube advertising their product, because if they're really able to double their money every month, basically in a year or two, they don't need to work basically, or they can take the entire money of the world in their bank account. It's not possible, because even with artificial intelligence, based on these 3 years of experience, what we see is that sometimes you are right, sometimes you are wrong. Most of the time we are right, and that's how we generate the return. But what we need to keep in mind is that if you are dealing with serious persons, serious money manager, they're gonna tell you that sometimes you're gonna win, sometimes you're gonna lose, and loss is a part of investing. So the investor needs to understand that sometimes, most of the time you win, and sometimes you lose. That's how the game is, because there is no such a thing as a free money. You press a button and you generate millions in just a few years. That basically doesn't exist, neither for NEXTAlpha nor for Warren Buffett or Jim Simmons.
So it basically works kind of close to close. So if you generate a signal that says to change your investment, you'll inform someone sometime during the trading day, and then they would execute a trade, like sort of right on the close. Is that the way it works? Sort of. What could someone expect? Like let's say I signed up for a subscription. What could I expect in the next month? Like, how much communication would you have with me?
So you so let's say you subscribe, and then the first thing that I usually do, that I always do with new subscribers, is to have like a walk-in session. So I will spend with you 20 to 30 minutes to explain you how to implement the strategy. So I want to make sure that the subscriber understands what it should be done. Okay, and then once this part has been settled, then at the beginning of the month, I will send a email notification, just basically telling in which asset we're going to be invested in the next 30 days. So whether it's QLD or GLD or TLT, and then every day I send out an email saying which one should be our exit price. So then the subscriber goes into its brokerage account and set up basically this price that it should be used as a threshold to automatically go to cash. And then if this threshold price is, if the position goes to cash, then at the end, like you were saying, at the end of the trading day, 3 to 5 minutes before the market closes, then the subscriber needs to open the position again. So just again, you can expect one email per day from me. And in terms of your time, I would say you need to spend between 10 to 20 minutes per day in implementing the strategy.
And it strikes me that, from working with some different fund managers, it strikes me that some people might use your product for almost as a financial indicator. So, for example, I was working with a money manager who was implementing some VIX strategies, and what he would do is he would sign up with many different services, to see what their ideas were, what their signal was at that moment, and it was worth it to him to pay for a subscription to use it as a sort of indicator. So sign up for your service. People use them for different reasons. For example, I was working with Guerrilla Trades. I had a Guerrilla Trades subscription, which basically picks stocks, and I wouldn't necessarily implement their exact strategies, but it would give me ideas. It was a starting point for me for ideas about the market, and it could also be a signal for me that NEXTAlpha is going. NEXTAlpha has gone to cash, or NEXTAlpha has gone to bonds, and so I could see people using it in that manner as well. Sort of personalizing how they used it. Do you have customers that use it in different ways like that?
Yeah, but well, I think this is a great suggestion. I didn't thought about using NEXTAlpha that way. So but personally, I don't know how the subscribers or customers are the subscribers. I don't know how the subscribers are using NEXTAlpha. I just send out notifications after they subscribe. But basically, what I would recommend to people is if people would decide to have the same approach as you're just you're describing now, I would say it's quite important to test everything. So if you decide to just take 10 subscriptions from 10 different service providers, it's quite important to see how these type of ideas would have performed in the past. It doesn't mean that it's going to repeat in the future, but if you need to use, for instance, NEXTAlpha as an indicator together with some other 9 indicators, it's quite important to see how all these bundles of indicators would have behaved in the past. But yeah, great recommendation.
Yeah, I've always, as a trader, I've had a network of people that I would talk to, and some people would always be wrong, some people would always be right, some people would be right sometimes, and developing this sort of network, whether it be information sources, people, indicators, is essential for money managers or traders, as you know from being in this business. Let me just mention now that if you want a chance at getting a free subscription, what we'd like you to do is just subscribe to the channel and leave a comment below. If you are selected, then I'll reach out to you and let you know that you won. This way, we're not like collecting everybody's emails or something like that. We're not trying to invade your privacy, but if you want a shot at a subscription, please leave a comment below, and if you win, then we'll give you a shot. And then we're probably going to be in the future maybe giving away a couple more subscriptions. We'll see how it goes. Well, listen, thanks for coming on. It's a fascinating topic which I don't know very much about, but I think I've learned a little bit more this morning, and best of luck to you. I guess we're all going to see what happens. The market don't look so great right now, but we'll see what happens with the election just about to happen.
Yeah, but well, thanks for coming to the show. And I mean, how I would like to say at the end, I mean, it doesn't matter what the market what the market does. What we are actually doing, it's algorithmic trading. So the market moves in a certain way, and it's the market itself giving us indications in what we need to be invested in. So best of luck to everybody in this volatile market. And again, thanks for having me at the show.
Great to have you. All right, and thank you for watching, and we will see you next time on the Short Vol Show Live. Bye now.